Want to know the latest important XRP news? Is it interesting to know the latest statements of David Shavarza? Then stay on this video and we're getting started. Many in the cryptocurrency community see the case of Ripple Labs UUSU, Securities and Exchange Commission, SEC, as the most significant legal precedent to date. If SEC Chairman Gary Gensler and his agency win the lawsuit, it would mean a more severe crackdown on the cryptocurrency business by the United States' top regulator. The motivations, though, might be dubious. In July of last year, attorney John E. Deaton's new platform CryptoLaw revealed shocking information concerning Gary Gensler. By releasing the so-called Gensler files, Deaton suggested that the SEC director could be favoring outside interests. Almost 2 years ago, it was revealed that Annabelle Lee LC and Marital Trust, two of Gensler's most important entities, had assets worth over $100 million, the vast majority of which were handled by Vanguard Group. On the other hand, Gensler's public itinerary reveals at least 7 meetings with Vanguard Group, but no crypto-related firms. Such bias has persisted to the present day. Gensler's bias for Wall Street behemoths is on full display at a time when not just Ripple, but the whole sector is fighting the SEC in Operation Choke Point 2.0. According to Fox Business's Eleanor Terrett, Gary Gensler's public schedule for September was only posted on the SEC website yesterday. Meetings with Vanguard Group, China's ambassador Nicholas Burns, and BlackRock are among the highlights. FTC Chairman Rostin Behnam was consulted 4 times. Former SEC General Counsel John Coates was consulted twice. When Gensler appointed Vanguard Group to handle his $100 million personal wealth, Deaton said he has allowed them disproportionate access to his office. Recently, Deaton speculated on the motivations behind the SEC's crackdown on Ripple and the cryptocurrency sector as a whole. The lawyer said Gensler would stick to its philosophy of regulating via enforcement until major financial institutions like Vanguard are pleased. According to Deaton's description, major financial institutions are typically positive about cryptocurrency. BlackRock CEO Larry Fink predicted that technology will play a key role in the current society. In addition, he underlined the need of acceptable crypto laws. Specifically, Deaton concluded, as such, Ripple may provide a standard for the SEC to follow when regulating cryptocurrencies, allowing the American agency to monitor all tokens and, ideally, all secondary market trades. In light of what Deaton has revealed, it is more crucial than ever that Ripple wins its case against the SEC in the Ripple and Securities Exchange Commission (SEC) case. Both sides have filed their closing briefs and are now awaiting summary judgment. But questions remain about the scope of the regulator's authority to exercise oversight in the cryptocurrency industry and the necessity of unsealing key documents. On February 27, Deaton tweeted that opinions vary on how to classify securities, in response to a comment by MicroStrategy Executive Chairman Michael Saylor, who said that Gensler's comments show that agreement is growing on the categorization of securities. He made the above statement while waiting for the summary ruling. Deaton had already discussed alternative settlement solutions for both sides. If the regulator determines that current and future XRP sales do not qualify as securities, Ripple, according to Deaton, would pay a settlement of $100, $250 million. He did warn that the SEC's recent assault on the crypto industry made it unlikely that they would approve of the strategy. Deaton said that the presiding judge might explain secondary XRP sales. It's worth mentioning that Ripple's general counsel, Stuart Alderoty, has already hinted that the SEC has very little prospects of winning the case at the Supreme Court. In response to the SEC's bullying and adhering to stretch legal arguments that were not loyal to the law, the few that had the bravery and resources to fight back against the SEC's bullying have resulted in 4 of the SEC's past 5 cases being lost in the Supreme Court. He stated, as was previously reported, the issue was given fresh life when journalist Rosalind Layton filed a request to get access to the Hinman speech paper. This June 2018 lecture by the SEC's former director of the Division of Corporate Finance may provide a good illustration of the agency's classification of securities. It's possible that XRP may be treated the same way as Ethereum, ETH, and Bitcoin, which Hyman pointed out are not securities. In a separate case, defense attorney James Filan disclosed progress in a class action lawsuit filed against Ripple in 2018. Investors in XRP filed suit against the firm and its CEO, Brad Garlinghouse, in California, demanding compensation for financial losses sustained as a result of the sale of XRP as an unregistered security. They're asking the court to rule XRP security. It was reported by Von Bold that Deaton had submitted a motion to intervene in the case as an amicus brief. The plaintiffs had submitted a new motion objecting to Deaton's request to join the case. When Brad Garlinghouse joined Ripple Labs in 2015, he certainly didn't expect to be at the center of one of cryptocurrency's greatest legal disputes. Garlinghouse has extensive company experience and fights regulators. Garlinghouse attributes his work ethic and honesty and responsibility to his Midwest heritage. Can Ripple's CEO fight for blockchain's future after working at some of the internet's top companies? Who leads Ripple Labs against the SEC with Chris Larsen? We must go back to comprehend Garlinghouse's crypto market ambitions. Charles Hoskinson and Gavin Wood are computer science, trained blockchain leaders. The XRP founder comes from a business and economics background, not New York or San Francisco. Hutchinson, Kansas, reared Brad Garlinghouse. Garlinghouse was raised in a tiny Midwest town and values family and community. Wichita Southeast High School and the University of Kansas gave him a BA in economics in 1994. Garlinghouse completed his MBA at Harvard Business School in 1999 with bigger goals. Garlinghouse interned at Allen Company, an investment banking company, while college. Garlinghouse worked as a JP Morgan analyst for 6 years after graduating from Harvard Business School. These years exposed Garlinghouse to Wall Street and the World Economic Forum. Early internet giant Yahoo hired Brad Garlinghouse. Garlinghouse developed Yahoo Mail as Senior Vice President of Communications and Communications and Community. These platforms are the foundation of the current internet. Garlinghouse is most known for the Peanut Butter Manifesto after his contributions to Yahoo. This famous memo called on Yahoo to simplify processes. Fintech companies shared the message. In 2009, Garlinghouse became president of consumer apps at AOL. He developed AOL Mail and instant messaging in this capacity. Garlinghouse also ran AOL Ventures. Bebo's purchase presented fresh issues. AOL Ventures sold Bebo 2 years later at a fraction of their acquisition price, making this move a failure. Brad Garlinghouse left Silver Lake Partners to work on blockchain and digital assets. Garlinghouse identified Dell MC, Airbnb, and Alibaba Group investment prospects as managing director. Garlinghouse was also a senior exec at Hightail. Garlinghouse made sure Hightail kept offering creative productivity solutions to its global customers after rebranding from Usendit. Garlinghouse left corporate life to join Chris Larsen at Ripple Labs in 2015. Since then, Ripple's CEO has led its growth in XRP development. Garlinghouse has advocated using blockchain to address banking regulations and cybersecurity. His outspokenness has made him a target of the SEC's cryptocurrency assault. The SEC's lawsuit against Ripple Labs has tarnished the blockchain company's CEO. The complaint seeks to clarify how the SEC regulates XRP. Brad Garlinghouse and Ripple Labs call XRP a currency, whereas the SEC calls it a securities. Ripple Labs and XRP have suffered from the litigation, with Coinbase removing the coin. Fear, uncertainty, and doubt have clouded XRP's prospects in previous bull markets due to reduced trading liquidity. The lawsuit should be resolved by mid-2023. The SEC's crypto and blockchain crackdowns continue. The SEC penalized Kraken $30 in February 2020, $3 for their staking offering.